I bet you're wondering why uranium underperformed and dipped this week, and why, for example, the URNM North Shore Uranium ETF went from $97 a share down to $87 a share. Apart from your regular whale stock market manipulations and the high frequency trading and all of that, there was some bearish news out of Cameco. Uranium miner Cameco reports 72 million Q3 loss, revenue down from a year ago. And in case you're wondering why that's important, well, it does make up 15% of the URNM North Shore ETF. And you may be asking, well, why would they report a loss with uranium prices skyrocketing? It makes no sense. Well, it surprised Wall Street as well. Wall Street analysts on average had expected an adjusted loss of 4 cents per share, whereas the loss came in at 14 cents. So that's why the shock in the stock price, and that's why it brought essentially everything down with it, at least today on October 29th. Let's dig into these results from the company and see what the heck actually happened. So first, the company is saying the following. So with McArthur River and Key Lake in care and maintenance, we are not at the regular tier 1 run rate of our business. They're blaming several of their assets being on care and maintenance and not generating revenue. Fair enough, but it gets very interesting if you dig into this report. So these guys probably know the uranium market better than anyone else, and they are sharing their insights with us here. So this is really, really exciting if you want to get a taste for what is going on in this market. The recent increase in the uranium spot price, about 46% since the end of June, demonstrates the thinning of uncommitted primary supplies, unexpected demand from junior uranium companies and financials has led to increased liquidity and better price discovery at welcome development, which has resulted in an increase of almost 28% in the long-term price. So here's just some bullish dialogue from the company about the supply-demand fundamentals that we've been talking about and how supply is shrinking while demand is growing. So overall, tough quarter for Cameco, which will drag the market down with it, but nothing bearish for the industry overall, at least in this report. Let's dig into some other headlines. This was a bullish headline out of Market Watch, an opinion piece titled "Big Investors Are Backing Nuclear Energy, a Potential Savior to the Energy Crisis That's Gripping the World." Much maligned nuclear energy is getting a second look as a reliable carbon-free source of energy that's cheap and scalable. Absolutely. But they're saying big investors, you always want to follow the money. So let's see what big investors are talking about. So nuclear energy is getting a renewed look. The best known example is Bill Gates' advanced nuclear reactor company, TerraPower, which teamed up with GE and Berkshire Hathaway, Warren Buffett, to eventually build a next generation small nuclear reactor using new fuel technology. And the timing is right as well, as the world economy struggles to rebound following last year's lockdowns, upending traditional energy supplies, and a transition to renewable energy. Nuclear advocates are using this time to push it. What this says is that Bill Gates and Warren Buffett are bullish on uranium. Again, to me, just one of the biggest possible pieces of information any investor could have. You want big money behind whatever you're investing in. Also, you have, and I think this is going to drive the price and be a bullish driver, because you have the UN Climate Change Conference, known as the COP26 Summit, starting on October 31st in Scotland. So let's talk about some of the big drivers to uranium and why it's being pushed by these billionaires and powerful people at places like the UN Climate Change. In case you weren't aware, there is an all-out energy crisis going on around the world. And here's a headline: Blackstone CEO predicts the energy crisis will worsen inflation and prompt social unrest. The energy shortage is severe enough that it could cause a lot of unhappiness, says Blackstone CEO, big-time Wall Street guy. Benchmark U.S. oil futures are on $85 a barrel, surging 75% year to date. Oil could rise to $100 a barrel. So massive supply chain issues causing serious energy inflation, coupled with divestment away from fossil fuels, is just going to cause this to spike even more. So what you have is a funnel of energy investment, all pointing to the only possible sustainable baseload power source currently, which is uranium. It's extremely bullish for nuclear power, as the elite choose where to put their money. They're not going to put it in fossil fuels, so the only option is uranium. So look out for more bullish talk from these leaders and big-time investors. Moving on to some other headlines. We love looking around the world, and we've talked about Japan, France, UK, US. We have not talked about this country, Korea. Well, Korea, believe it or not, has a plan to phase out nuclear energy, right? So this could completely be construed as a bearish development for nuclear power. With concerns about safety, Korea has a plan to phase out nuclear. This is obviously playing into the market and currently depressing uranium, understandably. With 24 reactors in operation, Korea ranks as the world's 6th largest producer of energy from nuclear power. And the narrative has been that the country is losing its status as a leader in the industry after the president introduced a plan to phase out the energy source when he took office in 2017, citing safety concerns. And so that is the narrative. That's what's baked into the price. And obviously that's been the narrative, not just in Korea, all over the world, but that's shifting, right? And so you have an opinion piece from the Korea Times saying that Korea's nuclear phase-out plan raises net zero dilemma. Well, here we go, a potential reversal, not yet priced into the market, but would be bullish because they have 24 reactors and that's a lot of fuel. So Korea's goal is to cut greenhouse gas emissions by 40% from 2018 levels by 2030 and achieve net zero by 2050. To meet the target, coal-fired power plants, which account for 36% of energy, will be closed by 2050. And the reality sets in. Experts, however, criticize the plan as taking a rosy outlook on renewable energy, which will lack competitiveness in Korea for a considerable time. So they're not going to have true good renewable energy for a long time, but they will close down their plants in that meantime. Sounds a lot like what Europe's done and where the energy crisis currently is. And look, there's an example from Spain, for instance, increased renewable sources of energy in its power generation while decreasing from coal. But there was, lo and behold, an unexpected steep decline in wind this summer, which decreased. So there's a lower amount of wind, just decreases the country's energy production by 20%. Boom. All this, accompanied by soaring natural gas prices, shows that now Spanish consumers are facing power rates that have tripled. It's completely unsustainable. And people in Korea are realizing that they don't want to make the same mistake as Spain. Don't you think that the Korea government reversing their stance on anti-nuclear to be pro-nuclear would be bullish for uranium? I think it would, and I think it's going to continue the trend as the dominoes begin to fall around the world in favor of uranium. You're going to want to keep an eye on this. So there's a massive anti-nuclear contingent in Japan. So a decade after triple meltdowns at Fukushima forced mass evacuations and a shutdown of the nuclear industry, Japan has restarted only a third of its 33 operable reactors. So the prime minister, if he gets in, will restart that. Extremely bullish. But because of the disasters, people are fighting back, at least some. 40% of the population are opposing the move to restart. Of course, that is not a majority, but I did want to point out that there's always this conflict of back and forth. Again, the market probably not pricing in a full reopening of these reactors. But when they do, it's going to cause the prices to go up. One last big headline to close on is that Yellowcake, which is a specialist company operating in the uranium sector with a view to buy and hold physical uranium for the long term, on October 26th announced its intention to issue shares to raise $150 million to purchase 1 million pounds of uranium from Kazatomprom. So this is just another financial firm, in addition to Sprott, in addition to Kazatomprom, buying up supply, causing even a bigger supply-demand crunch. And it's all going to come to a head once these financial firms take it off the market and hoard it, essentially. And these guys aren't going to, in my opinion, are not going to want to sell for a 1x gain, right? They're buying for the long term. They're hoarding it. They're buying today at these prices, meaning they are confident that the price is going to go up. We'll see if they're right. A lot of signs are pointing to them being right and the price continuing to rise. But it's important to stay on top of the news, and we will keep you posted. This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.